Good afternoon, good evening. Reggie Empire back at you. I did a video about Google's expectations, and I said, don't be surprised if they sell the news. And here we are. Google's down 1.24%. Google quarter two earnings top expectation, but CapEx growth. Wall Street does not want to see a lot of CapEx spending. As soon as you say top line, bottom line, and you start talking about CapEx spending, they're like, eh. It doesn't mean there won't be a delayed reaction. That's what happened to Micron. That's what happened to Nvidia. Nvidia is only up 5% year to date. So let's go ahead and hit the highlights and get you, ladies and gentlemen, out of here for this evening. Google reports its second quarter earnings after the bell and went on Wednesday, beating Wall Street expectations. Cloud revenue increased 82% for quarter. Alpha saw earnings per share $9.11 and $119 billion in revenue. Analysts were anticipating EPS of $116.9 billion to their $119. But the company also stated that it's raising CapEx spending for the years to between $195 billion to $205 billion. I'm just laughing because I find it like diabolical that Wall Street doesn't understand that it takes time to build infrastructure. Consider the stock on sale. I'm not a financial advisor though. I'm sorry. I see the stock being on sale. Alphabet stock fell more than 2% on the news. Google Cloud Platform brought in 24.7 billion above expectations of 24.56 billion. Ahead of 13.9 billion on its broader that it brought in last year. So it brought in 13.6 billion last year, and they brought in 24.7 with a big jump. Advertising revenue came in at 81.63 billion. Analysts were looking at 81.12 billion. Quarter two was an amazing quarter. Alphabet revenue grew 24% year over year. Google Cloud revenue grew 82%. I can't believe the stock is. It's not. It's. I foresee it being just fine when the stock market opens up. Remain performance obligation (RPOs) are contracts that Google still has to deliver. Hit 514 billion. Wall Street analysts were projecting 488 billion. It's half a trillion in a quarter. Investors recently pulled back on the AI trade as they continue to digest massive spending on data center and chip power their AI platform. At the same time, tech companies have repeatedly stated that they are capacity constrained with demand. What they're trying to say is there's a backlog to 2027 in some companies, 2030 in certain companies. Look, I'm just a guy on YouTube. I've been putting out some information, but this is, I expected this. I called it. Let's see. According to Bloomberg, Google has delayed its Gemini 3.5 Pro model over concerns related to capabilities compared to other leading models. Okay, you pull it back, do a little R&D. Okay. Quote, we are shipping quickly across wide range of models while keeping them high cost effectively for customers. A spokesperson told Yahoo Finance, quote, we are currently testing 3.5 Pro. I use the heck out of Gemini. I'm looking forward to this. And upgrading Flash models and other models with partners and work productively engaged with U.S. government. Amazon, see, I'm a Nvidia holder, and Nvidia pulled back too. Amazon stock has been about flat over the past 3 months, while Meta has declined 6%. Microsoft, all these AI stocks are on sale, ladies and gentlemen. I'm not a financial advisor though. We pretty much hit all the highlights. Remaining performance obligation. RPO hit. We talked about that. So this is going to be a short video. I mean, we can look at the stock. Let's see. So here we go, ladies and gentlemen. The stock is down 1.24% on a day and down 2.7% in after hours. Let's see what the experts say. I like to get both angles from, right? Quarter two earnings report growth revenue 24,119, same thing. Despite these impressive results, the stock fell 5% and after hours trading due to high capital expenditure. Stock is 4.12 trillion, which I talked about earlier. And let's look at the support lines. Hold on. All right, ladies and gentlemen, let's play a little candlestick. All right. This is how I read it. I'm not an expert, but we're at 341. The stock, let's see. Let's go to a day. One day. Let's do this first. All right. So in the beginning of the day at 10 o'clock, the stock saw, it was at 349. So the stock is down $9 roughly, right? So then I go here and I look at the support lines. So if you look here, 370, which was on the 15th of July, right? Then it dipped. But look at this dip right here. See this dip right here? On June 26th, the stock was at $335. So it pretty much retreated back down to, so if it dips tomorrow, it's going to dip down most likely to $334. If it goes below $334 a share, there is a bigger problem. Because the next support line after that is 330. So I don't foresee it going lower than $330 a share. The next support line after that is a bigger dip, 315. That's how I look at it. And you can see what it did. It's retreating back to the last support line, which is right here. So, with all that said, ladies and gentlemen, we talked about Google's earnings. They beat top line, bottom line, and what was their forward guidance? 1 second. So Google raised their capital expenditures to 195 to 205 billion, up from 180 to 190. Okay, so they increased it. And CapEx spending. Okay. Well, I said, y'all, that's the end of the video. What do y'all think? Do you think Nvidia's going to retreat down to $330 a share? Or do you think it's going to rebound tomorrow? I think it's going to drop a little bit low because I think the 1% want to pick up a little more shares. They're going shopping. That's what I believe. Well, like I said, that's the end of the video. Please like and subscribe and share this video if y'all choose to. Y'all be blessed. Red J Empire out. I'll let y'all whoop.